This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Thanks for being with us here on Business Now. Across the country, when we have a look at the property markets from the weekend, there were 1,527 auctions, a clearance rate around Australia 52.3%. So it's much lower than it was in boom times, but still there are people out there buying. In Sydney, there were 432 auctions, a clearance rate here 50.9%, was grand final weekend, didn't seem to impact it too much. In Melbourne, 588 auctions, a clearance rate 57.7%, a little higher. In Brisbane, just 70 auctions, a clearance rate there 40%. In Adelaide, 51 auctions, a clearance rate of 66.7%. It has been stronger for some time. In Canberra, 40 auctions, a clearance rate 67.5%. But let's bring in here from REA Group, Economist and Flaherty, who's with me now. And many thanks for your time. Those clearance rates, do they give you a bit of a sense as to what's taking place in the housing markets right now? I mean, look, if there's 50% of properties sold, there's still 50% waiting for sale after the auctions. That's adding to the amount of stock building up on the market effectively.
That's right. You know, when you see properties pass in at auction, they remain on the market. We have seen an uptick in the number of properties hitting the market. And, you know, as you were saying, those clearance rates aren't as high as they were during boom time. However, if we look at the historic average levels, clearance rates are actually still relatively good.
OK, so that's the case. Clearance rates are still relatively good. There are still buyers out there, there's no doubt, notwithstanding rising interest rates and the prospect of more coming tomorrow. PropTrack, of course, its index came out on the first of the month, as it always does, but it's now starting to show, you know, the signs of the falls. But when you look back at what they've done over the past couple of years, they're still sharply higher, aren't they?
Well, that's right. You know, we've seen property prices come down from their peaks earlier this year, but nationally, capital cities are sitting exactly at the same price level that they were exactly 12 months ago. And if you look at pre-COVID levels, if you compare to March 2020, we're still significantly higher in almost every market.
It's just interesting noticing now, we've got the graphic up on the screen at the moment, just having a look at that and seeing the prices. You're also even starting to see less of a disparity between the major capital city prices. Canberra above Melbourne. Melbourne and Sydney are now starting to get closer together in terms of that median price. I mean, Sydney at one stage was way ahead of the other capital cities. So, you know, it's now the one that's probably seeing the biggest price falls, having seen the biggest gain in recent years.
That's right. We are seeing some quite notable differences between the capital cities. So Sydney has seen the largest declines, followed by Melbourne. And the reason for that is that property prices are just so much more expensive in those markets, which means that on average, people need to borrow more to buy. And with interest rates rising, that relative impact of those interest rate increases is being felt more strongly in those markets.
OK, so it all comes down to affordability, but what about the future? That's the key. Given the fact that rate rises are not ending as they try and head off inflation, it means again that affordability is going to get tougher. And it's really only when the interest rates really are hitting the homes, the households, that they're going to start to feel the pinch and have to curb their spending or their behaviour in some way.
Yeah, look, you know, high inflation, high interest rates, all of these things are having an impact. You know, people say on the one hand, it's good news that property prices are coming down for affordability. But then, of course, that's counteracted by the fact that people are having to pay more in borrowing costs. So it essentially outweighs, in some senses, the declines that we've seen in property prices.
And so just explain again a little. The Reserve Bank tomorrow, as the markets say, raises interest rates by another 0.5%. At the moment, people seem to have taken it in their stride. They're affording it because they've got jobs. That's one of the keys. While there's relatively full employment, people will manage for a period of time.
Yeah, but we are already seeing interest rates having an impact, and not just the interest rate rises that we've already seen, but, you know, we know from consumer surveys that people are expecting more interest rate increases. So those borrowing capacity issues are going to, I would say, grow over the coming months into the first half of next year. And so that is definitely going to impact the property market. We do expect to see further price declines.
I'll tell it, Anne Flaherty from REA Group. Always good to chat to you. Many thanks for your time today.
No problems.